Hello everyone, my name is Dan Basse, President of AgResource Company here in Chicago, coming to you with Bill Tierney. Dr. Tierney, I thought we'd just spend a few minutes talking about the upcoming March 31st reports. They tend to be the most important of the winter time frame, really early spring, late winter. And when they set the stage for the growing season. So as we look at those reports, I'm troubled. Many in the industry are talking some sizable stocks. What do you think?
Well, in the past, we've seen some real fireworks after these reports. Almost always the fireworks were associated with the corn stocks number. But it did have impacts on soybeans and wheat. And that's because if you get a dramatic movement in corn, it tends, in this report, to spill over and impact soybeans and wheat. Now, what was interesting is that the first stocks report of this marketing year was in December, and the trade's estimate of corn stocks came very close to what the actual number was. And there's perhaps some evidence, it's too early to say, I'd like to see maybe a year and a half, there's perhaps some evidence that the variability that we saw in stocks estimates over the previous 5 or 6 years has finally worked its way out of the system. So, so far, the estimates that I've seen from a few industry analysts are fairly narrow. Corn stocks are expected to be at I think, a 29-year high. Soybean stocks are expected to be up sharply from last year. Wheat stocks are up as well. So from that standpoint, if it's true that we don't have an unexpected surprise, I think the stocks report itself is going to be somewhat bearish to the market because it's going to confirm that this is another year of building stocks.
And importantly with that, we'd probably look how much of that stocks is on-farm versus off-farm, particularly as we go into the planting season. But you are talking about 29-year high corn stocks, near or record large bean stocks and wheat stocks that are probably the largest going back in 30 years. So we surely don't have any shortages of old crop grain.
No, we don't. And that picture is mirrored globally as well. So it's not just the U.S. stock situation. It would almost be a favorable position if we had all the stocks and the rest of the world was short. But that's not the case. So it's not just the U.S. that's looking at burdensome stocks, record stocks. We're also looking at record or near record stocks globally as well.
So the market will start turning the page from old to new crop more importantly here after this report because we get plantings estimates. We are believing anyway, due to the WSDA that gave us their reports, at least on the 3 principal crops, that acreage will come down. That number, according to your analysis, was down, I think, something like 4 million acres or somewhere in that vicinity?
Yeah, what a lot of people don't realize is that the best way to make an analysis on prospective plantings is to compare last year's prospective plantings to this year's prospective plantings. And what USDA did at the Outlook conference is they gave a specific acreage forecast for corn, soybeans, wheat, and cotton. And if you go back, it's about 11, 12 years that they've been doing all of those 4 crops, you'll see that they are projecting that prospective plantings will be down 4 million acres. I think last year was 238 or something. I think they're projecting something like 234. We expect that prospective plantings for those 4 crops will be down about 2 million acres. I think the big difference between our analysis and what some other people are putting out is we actually think that corn acres is going to be a bit higher than what USDA, maybe 2 million acres higher. We got virtually the same number for soybeans, same number for wheat. But I guess the corn number is the one that's going to tell whether our analysis is correct or not.
Now, corn is going to be important. If I hear you correctly, you're at about 92 million acres versus USDA at 90. So that would be a sizable increase in U.S. corn seedings relative to last year.
Yes, it would. But keep in mind that we're comparing it to final plantings and not prospective plantings. If you compare it to prospective plantings, it's not that much different. I think the big argument is that there are, USDA included, and others in the trade are arguing that farmers are going to intentionally leave crop area unplanted due to low prices and financial losses. We have total area planted down about 2 million acres. I was actually born in Missouri, and it's a show-me state, and I'm not going to believe that farmers are going to intentionally leave crop area unplanted until I see it. Maybe this is a year that's going to be the case. I think at this point, 2 million acres reduction is adequate. If they reduce it 4 or 5, then maybe that's clear indication that farmers are much more sensitive to price signals than what I had expected.
Thank you, Dr. Tierney. We really appreciate your time. I'm Dan Basse, President of AgResource Company, wishing you adieu. We'll be back again with another special video series in the near future.